In 2015, Bill Gates was the world's richest man with a fortune of $79 billion. Fast forward to today, in 2026, and Elon Musk's net worth has exploded past $720 billion. But here is the interesting part. While the world's richest individuals are betting their fortunes on AI and space exploration, the world's richest nations are quietly betting on something much, much older: gold. Why is this new era of artificial intelligence causing a massive global rush back to physical vaults? Today, we're recounting down the top 10 countries with the largest, validated gold reserves and revealing how AI is fundamentally changing the way we trust them. Let's dive straight into the leaderboard of the heavyweights. Coming in at number 10, we have Turkey, holding over 630 tons of gold. They're using this ancient asset as a powerful shield against record-breaking inflation, a strategy that's proving vital for their economic stability. Next up, we have Japan and India. India, in particular, is on a rapid climb, now holding close to 880 tons. For India, gold isn't just an economic safety net. It's deeply woven into their culture, representing both wealth and security for millions of families. But as we move up the list, some things haven't changed in decades. The big four European nations remain dominant forces. France, Italy, and Germany together hold a staggering 8,200 tons of gold. These countries form the bedrock of Europe's financial stability, holding on to these massive reserves as a guarantee against any economic storm. Germany alone holds over 3,350 tons, a testament to its long-term, cautious economic planning. And at the very top, the undisputed king remains the United States. With 8,133 tons of gold, America holds nearly as much as the next three countries combined. This colossal reserve underpins the US dollar status as the world's primary reserve currency. For decades, the sheer size of its gold holdings has been a symbol of its economic power, a final backstop in a world of financial uncertainty. But holding the gold is one thing. Proving you have it is another. And that's where the story takes a fascinating turn in 2026. Here's the big twist. For centuries, we relied on human auditors. Imagine teams of people with clipboards, manually counting and verifying every single gold bar in heavily guarded vaults. It was a process based on trust, but also prone to human error and manipulation. Today, that's all changing. We're now using AI-assisted satellite imaging to monitor vault locations and blockchain-verified IoT sensors attached to the reserves themselves. This isn't science fiction. It's the new reality for central banks. In 2026, central banks are using AI to prove, with mathematical certainty, that their gold is actually there. This is what's known as a zero-trust model. In an age of digital currencies that can fluctuate wildly and deepfakes that can sow chaos, gold verified by AI is becoming the only asset that cannot be hacked, faked, or digitally counterfeited. It provides a level of certainty that the digital world simply can't match. This new verification standard is what's keeping the global economy stable. Even countries like Russia and China, which are actively trying to move away from the US dollar, are embracing this trend. They're not just buying gold on the open market. They are aggressively mining their own land using AI-driven autonomous rigs. These smart machines can analyze geological data to find massive deposits that human geologists missed for centuries. They are in a race to build their own independent reserves, audited by their own AI systems, creating a new geopolitical landscape where verifiable physical assets are power. So, what does all of this mean for you? We are officially entering the era of the one-person billion-dollar company. Think about it. With AI agents capable of handling the work that once required 100 employees, individuals can now generate wealth on a scale previously reserved for small nations. The cost of expertise is plummeting to near zero. A single entrepreneur with the right AI tools can manage marketing, sales, logistics, and finance, outcompeting entire companies from just a decade ago. But notice the fascinating trend here. As tech titans like Elon Musk, Larry Page, and Jeff Bezos build our digital future, they are also simultaneously securing physical assets. They understand that while digital wealth can be created quickly, it can also be volatile. Knowledge in 2026 isn't just about learning how to code anymore. It is about mastering agent orchestration, the art of using a team of AI agents to manage your digital portfolio, while simultaneously keeping hard assets like gold as your ultimate circuit breaker. It's the ultimate hedge. Your financial strategy needs to evolve. We're moving from chatbots that simply talk to AI agents that act. They can manage your bank accounts, execute trades based on complex market analysis, and even run entire online businesses for you while you sleep. At the same time, the rise of ultra-efficient AI models, like China's DeepSeek, is making this powerful technology cheaper and more accessible than ever before. This is democratizing wealth creation on a global scale. The new billionaires aren't just software gurus. They're the new oil barons of compute power, like NVIDIA's Jensen Huang, controlling the resource that fuels the entire AI economy. The world is changing at a breathtaking pace. We've gone from Bill Gates' software empire to Elon Musk's AI-driven universe, and wealth is moving faster and being created in ways we never imagined. But whether the asset is a tiny microchip powering an AI or a solid gold bar sitting in a vault, the fundamental secret to wealth remains the same: own the infrastructure of the future. The game is no longer just about digital or physical. It's about mastering both. If you want to learn how to navigate this new landscape and get the full 2026 AI Millionaire Playbook, make sure you hit that subscribe button. And don't forget to check out the link in the description below to download our exclusive guide. Thanks for watching.